price down. To enter a sell trade here, we place a sell trade below the low of this candle and keep our stop loss above the doji candle. So these were the 7 candlestick patterns that can help you spot trade opportunities, but we are not done yet. We will now understand how to use price action concepts to find entries using these patterns. We will use support and resistance levels and trend lines to combine the candlestick patterns with price action. Here is an example. The price was in a downtrend, but it found support near this area. We see 2 reversals here and mark it as a support level. Then the third time, when the price arrives near the support, we expect it to find support, but we are waiting for a candlestick confirmation. On the down move here, we see that as the price approached the support, the candles became smaller in size. This was the first sign that the sellers were losing momentum. Then, we see this doji candle form at the support, another sign of support. The doji is followed by a large green candle, indicating that the buyers had taken over the control and were ready to move the price. The green candle completed a morning star pattern. It was a strong pattern because the green candle broke above the high of the doji candle and the red candle before it. So a buy trade can be placed above the high of the green candle. We can place our stop loss below the pin bar, and we can target this high. As you can see, the price moved up after our entry. Even if you missed the entry, the price also gave us a second entry. The price made these 2 tops, creating a solid trend line. When the price reaches near the trend line again, we wait to see if the price develops some pattern. This red candle indicates that the sellers were trying to provide resistance at the trend line. The candle is followed by a large green candle that completely engulfs the red candle. It's a bullish engulfing candle. The low of the green candle is lower than the red candle. The high is higher than the red candle. Again, a very strong indication that the buyers have taken control and the trend line is not strong anymore. A buy trade could be initiated here as well. We place a buy order above the high of the candle and we put a stop loss below the candle. Our targets will be these highs. As you can see, the price achieved our targets on this trade. Here is an example of a sell trade. Here we see that the price finds resistance around this area. Then, when the price tests this resistance the second time, we see it create an evening star pattern. We have a green candle, a doji, followed by a large red candle. The red candle is so large that it closes way beyond the lows of the previous 2 candles. Hence, it is a high probability pattern. So we place a sell trade at this candle's low and set our stop loss above the high. For our targets, we can target these 2 lows. And as you can see, the price achieved our targets. I hope you have now understood how to use these candlesticks for your trading. Again, the candlesticks alone are nothing. You need to combine them with other factors to create a trading system. You can head over to our website to get free training. The links will be in the description.